Places like the US are really pushing to reshore manufacturing back onto US shores. There's places like India that I do think are.
Yay. I was just waiting for that.
I do think have a lot of ingredients of a good setup because it's much more domestically oriented, not that exposed to some of those connections to places like the US that really get hit in a world of more tariffs. I really think it's obsessiveness. And it may not be undervalued, but but if you just look at the world, you have to be successful over time. I believe there's like a certain level of intelligence that you have to have, but above a certain level, it really doesn't matter how smart you are. And smarter people can actually get in their own way.
Erin, it's so good to have you finally. So thank you so much for taking the time.
I'm really excited to be here and great to have the conversation. So looking forward.
Absolutely. And congratulations on the new offices of Bridgewater. I'm excited that you finally get to be in New York where you live as well.
Yeah, so we're really excited. We basically have an outpost now in the city, in addition to our home base in Connecticut and offices across Asia. So it's really exciting, and maybe we'll get to meet up in person too.
Yeah. So, Erin, tell me a bit about yourself and how and where did you grow up, and did you always want to be at a hedge fund?
I grew up in California. I spent most of my childhood in Marin County, which is just across the bay from San Francisco. My dad actually moved out to Virginia when I was in high school. So then I sort of was a bi-coastal high schooler through those years. And the short answer is no, I didn't ever think I would be working at a hedge fund. So both of my parents were doctors, and I loved science. I loved understanding how the world works. I loved chem in high school. I was a neurobiology major at Harvard. And I really thought I was going to be science all the way, running a lab or something one day, trying to, I don't know, understand aging and all these things. But so I did a lot of lab work, and unfortunately, I realized that I actually hated working in a lab. The the day to day, the level of interaction with other people, and just what the work is like at a bench. I did spend a couple summers slicing many rat brains. So I very much admire everyone who is excellent at that work, but it just wasn't for me. So then I started thinking, what is the right path for me? And somewhat fortuitously, I took an intro to economics course my junior year, and one of my good friends also did an internship at Bridgewater. And she described it as, this is a place where they're trying to go build understanding how the world economy and markets work. And also, it's a place that really pushes people on what do you like? What are your strengths and your weaknesses? How can you be better? And I thought, that sounds great because it both hits. I've always been passionate about research and understanding how things work. And also, actually, at the time, I wasn't comfortable at all telling other people about their strengths and weaknesses or even necessarily hearing about them myself. So I said, that sounds great. It'll really push me in an area that I want to be a lot better. And I came out for a summer internship and then really was hooked for life. So that's where I am still.
That's very cool, and obviously, it's a great culture to be in, and you get to learn so much about yourself. And I think investing overall, is really that, right? Like once you understand what your strengths are, at least as a venture investor, I can tell you that's how you are able to even help founders because you may be doing 10 different things as an investor, but just this one thing that can be actually helpful to the founder, and that's also your strength is really a beautiful combination. For sure.
Totally. And I think the world of investing, it's, you have to be brutally honest because if you're not brutally honest about what's true in terms of a company or a business or their prospects for the future, you're just not going to get it right. And so in a lot of ways, I think it fosters that attitude and that way of being, which is like, just be brutally honest, look at reality as it is, and do that for yourself as well as for how you're thinking about your investments.
Right. So you're the head of Alpha Engine at Bridgewater. What is Alpha Engine?
So first, let me start at what's Bridgewater. So Bridgewater is a global asset manager, and our goal is really, as an asset manager, to understand the world's economies and markets better than anyone else, translate that into alpha, so generating returns by betting on what's going to happen going forward, and also by partnering with our clients more broadly on their portfolios.
Right.
So that's like the overarching mission for Bridgewater. The alpha engine at Bridgewater is the part of the investment organization that's responsible for the first half of that goal. Understand the world's economies and markets better than anyone else and translate that into returns. So we're responsible for pure alpha, which is our flagship alpha strategy. And my team is the team that it's broken down into all of the different asset classes that go into that, and then the portfolio construction process and oversight of that portfolio, and then headed by our managing CIO, who's my partner, Greg Jensen.
So let's get to systematic investing. You were named to Crane's list of notable women on Wall Street a few years ago. So firstly, congratulations. Secondly, I also went to Bridgewater's website, and it said that Erin has pioneered our systematic approach to carrying out micro research at scale. So, what is really systematic approach to investing? Because I believe that a lot of our listeners will actually be either first-time investors or would want to go to an investing role. I mean, it could really be into a venture capital firm, but also sometimes even a hedge fund. So they would want to understand as to what systematic investing is. And I'd love for you to break it down.
So our approach, I think there's different modes of systematic investing. And I think it's important to distinguish how we think about systematic investing. What we do is we take a fundamental systematic approach. So fundamental means first starting by deeply understanding the cause-effect linkages that drive the world economy and markets. So for instance, a very simple example is, why does an increase in interest rates flow through to decrease in growth? Well, you have to understand the linkages, which is generally growth is fueled by credit creation. And when an interest rate increases, that makes it less attractive to borrow, more attractive to save. People are buying less items on credit, like cars. That leads then to less spending, which is what translates to lower growth.
Yeah.
And so you have to understand those fundamental cause-effect linkages, which is powerful because then you might say, let's say there's an environment where nobody's borrowing. So how impactful will an increase in interest rates might be much less because that fundamental linkage is no longer there. So we start first from that fundamental perspective on what drives the world's economies and markets, really from like a common sense, like how do economic actors work, thinking. And then we use a systematic approach to applying that logic. So that means that if I think interest rates go up and that impacts credit creation a certain way and then growth, you can actually codify that logic. And that enables you to really stress test through time. So I could look at over in the US over the past 150 years and across all the major global economies. Is that actually true? When you increase interest rates, does that flow through actually happen? Or when doesn't it? And what's different in those environments? So there's the power of the stress testing just on the quality of your thinking. And then it also enables you to apply that thinking going forward, really on any opportunity in the world, wherever it comes up. So
Right.
my team doesn't need to be having someone checking on whether exactly what's happening and rerunning a model, them like replaying and going through all the logic in their own head again every single day. They have a model that's doing it for them and then saying, these look like attractive opportunities, given this is happening, given what's priced in. So that's really the power of systemization. But for us, I think it's important. There's some places out there that don't have the fundamental approach. It's much more almost statistical in some ways.
Right.
It's we really take that combination of fundamental approach and then systemizing that logic that starts from kind of the common sense fundamental linkages.
Right. And then how do you sort of cap the amount of data, or if not cap, then how do you determine like the number of data points that you would need to even stress test some of these situations? What
Yes.
is a number? When do you stop? When do you start?
The biggest parameter really is thinking about, well, how would I feel it's a representative sample?
Right.
And when we think about that, we're looking at macroeconomic conditions. So we think about, well, we want to look at there's different types of environments. There might be inflationary environments or less inflationary environments, or different types of economies, like an emerging market that's capital reliant versus another economy that's much more domestically driven. And so we try to look at, it's not like a number of data points, it's more of a sample that represents a breadth of different
Mm.
circumstances. So you actually feel it's a real stress test versus, I'm just looking at other points in time that were very similar to what we're seeing today.
Is there anything else that you could potentially apply systematic approach to? Like anything else, maybe even in life, in personal life? I'm curious. It's a good way to plan things. Clearly.
I mean, I think I should probably be more systematic in other parts of my life as well. It's a good lesson. I mean, the big place I try to that I try to be systematic as well is in thinking about, I manage and I lead a team.
Right.
So there's what are good, and Ray really started this with he had his principles for how you manage, which in other words, where he was taking his ideas for how you might manage people and codifying them in what he called principles. I think there's a lot of thoughtfulness in that and thinking about what are, key ways that we agree are just kind of how we want to operate together, what works well. So there's some of that I do try to apply in terms of management of the team as well, and just thinking about, basic things like it's always important when you're thinking about structuring a team and going out and heading into a year, it's really important to start first with, the who is more important with the what. Setting
Yeah.
individuals with key individuals who you believe are highly capable with clear responsibilities. You'll get a lot more because those people will attack things at a goal level. And if you start from like a to-do list and not clarity of who's actually responsible for what. So
Right.
things like that, like just taking kind of more what are good, important, fundamental lessons about how to approach problems from a management perspective is another area that I've thought about.
And how do you inject some level of flexibility into systematic investing or systematic anything?
Yeah, I think the key question is, so the basic goal of system is to take the thinking that's in your brain and basically represent that thinking, and then you don't have to think about it anymore, right?
Yeah.
So the key times when you'd want to be flexible is if you're like, well, I'm thinking something new and it's not yet codified in the system, or maybe I can't codify it because I don't have the right data
Yeah.
or whatever it is. So in general, that's how I would think about flexibility is one, it's important to be rigorous and ask yourself that question. Am I just being sloppy? Or is it actually that I have a new thought and it's different from what's in the systems? And going through that thought process. And then, yeah, of course, I think it's important to enable flexibility on top because you're not always going to be able to perfectly systematically capture everything through time, especially as conditions might, let's just say there's new dynamics at play that you want to capture on a forward-looking basis.
And does with time, systematic investing or approach to anything get better with better data points? Or, is it also possible that in a very different scenario, it just is wrong? I mean, it could be wrong also, right? Like factors totally change.
Yeah, absolutely. So one, I think it's part of the process that's really important in a systemized approach in general is thinking about your data and having really well modeled, we call it well modeled, meaning like you've taken all of the data in the world and you've actually thought about how you clean it and how you also represent it as concepts. So it's not just like a mess of every single data point,
Yeah.
not labeled. You can't tell this is the same concept in the US as it is in China because they're different stats labeled or whatever. So it's modeling the data is super important, just so that you actually, first of all, get an accurate reflection of the concepts that you're trying to capture and capture things like maybe a stat reporting agency suddenly changes how they classify something. Well, you got to make
Yeah.
sure you're capturing that and that your data, your model data is reflective of that change and doesn't like have a, change, whatever, a level shift or something. So
Sure.
there's the more simple level of that I think is important. And then there's always asking yourself the question of what if my existing model doesn't capture new influence that matters? And that's where it goes back to what I was saying before. I think you have to think about what is that influence? How would I think about that? And you have to ultimately the goal of the system is to improve the thinking in your brain, not to replace the fact that you have to keep thinking in your brain and thinking about what you could be missing. So
Yeah.
that's like always part of the exercise. And that's what leads to new evolution in the systems, is that thought process and that loop.
Yeah. I love the importance of the brain, and it's very rarely talked about now, given that everyone's just on chat gpt all the time. Just today I heard the speech by Mukesh Ambani. I don't know if you're familiar, of Reliance group in India, where he was giving a high school commencement speech, sorry, undergrad commencement speech, and he said that, it's great to learn how to use chat gpt and AI or whatever, but it's very, very important for you to use your brain as well if you want to succeed in life. You just can't rely on chat gpt all the time.
I agree with that. Yeah.
Yeah. So just like shifting gears to AI, obviously AI and financial services have the power to be, pretty transformational in the coming years. And financial services especially excites me because it obviously has a lot of data, but is also very regulated. I've also very closely followed Bridgewater's journey, making a good use of technology to be able to help your clients. And you've also been actually very, like, you've been at Bridgewater for really long. So how have you seen technology or the usage of technology with regards to AI or just technology in general evolve at your fund?
In part because of that approach, the fact that we always were taking a systematic approach, being on the cutting edge of technology has been critical to our business, and it's been an area we've always been focused. I
Yeah.
remember, so I did start at Bridgewater 15 years ago. I'm
Hey.
getting on in years these days, but back when I started, even then, in the first few years, Greg Jensen, who's managing CIO in the Alpha Engine, was already really emphasizing the potential for AI to revolutionize investing.
Hmm.
And I think in part he saw that because if you think about what we do at Bridgewater with the systemized approach, in a lot of ways, that's like the most advanced expert system that there is in investing. It's like taking human thoughts, codifying it using a computer. It's
Yeah.
like an expert system. So Greg, even back then, saw the potential of AI increasingly to take that exploratory loop from perception to systemization to the portfolio. And right now, the human was really doing the beginning part of that loop, the perception and the new ideas, but how much could we stretch how
Right.
much is being done by computers? And so we started investing a little more than a decade ago, brought in a data scientist, including someone named Jazz, who's really expert in the field, and started to explore. And in the past couple of years, Greg identified that we were, the past several years, we really identified that we were at the precipice and that things had changed
Right.
and that there was an opportunity where he actually believed that that vision could become a reality. And so what we did was we really created an internal venture almost where we set up a team. We call them the AYA team. It stands for Artificial Investment Associate,
Okay.
because all of our investors are called investment associates. So it's the
Right.
Artificial Investment Associate. But so that team, their goal was basically to create an investment process where AI was going through that full loop again with the principles of identifying relationships that were fundamental, that were causal, not based on correlation, but doing that using AI and then applying and generating a portfolio. And that's been extremely successful. So the fund started at the beginning of last year, and so far it's been amazing. And also the group has been, it's, I think, an exciting area because many of our clients who are institutional investors, some of the most sophisticated clients around the world, it's also an area where they're all thinking about how do I apply some of these learnings for myself. And so our goal with that fund is there's both the return stream itself, but then also the partnership with those clients who are coming
Right.
up in with us in those early days on thinking about how to use these types of techniques.
I love that level of sophistication because so my husband, he is an AI research scientist. So we talk about AI and the application of AI in venture at least quite frequently.
Yeah.
Uh, and so to your point of, your clients getting to learn from you as well, as you apply technology into your investment process is pretty spectacular because I believe that now that everyone's learning, the entire ecosystem is new really, right? So now that everyone's learning and learning together, it's a very different kind of collaborative learning that at least I haven't seen so far. So yeah.
Yeah, it's super. I mean, it's a very interesting environment. Obviously, developments this week, with everything that's been going on.
Yeah.
Very exciting. I'm sure very exciting for you in the venture ecosystem. So, yeah,
Yeah, no, I invested in a stock that just crashed, but it went back up today, so I'm
that's
happy.
good. Yeah, yeah.
So that's very interesting. But you also mentioned AIA. So are these like AI people on the team, or are these finance people? In short, like if someone has to become an AIA at Bridgewater, how do they prepare?
Our approach has been that team is a team that's a combination. It was seated with some of our best investors who came from the Alpha engine, some of those strongest people, as well as some technologists and what we call engineers who were expert in how to build systems. But then we also complemented the team with data scientists
Right.
who are experts in terms of thinking about AI. And I think that kind of an interdisciplinary approach has been really critical and important because there's things about, like I was talking about before, how do you stress test? How do you identify causality that are just bread and butter for how our investors have always thought about things? But then, the data scientists have their own way to think about that and apply it using their methodologies, and bringing that all together, I think, has been bringing the best to bear. So yeah, I think my main advice is I think there's many angles to get into the dynamic, but finding the right team where there's a mission you're super excited about. It's a good balance of people who are going to bring the different skills that are needed, I think, is the most important thing.
Yeah. And I think just touching very briefly on the topic that we just spoke about a few minutes ago, which is the importance of brain in itself. But what do you really think would define a successful investment manager of the future?
I think that if you're thinking about what it takes to beat markets, so when you're saying hedge fund manager, I think there's different approaches to investing. There's an approach to investing, which is, holding assets and thinking about what's the best way to hold just a more passive portfolio of assets, which is one set of skills. If you're talking about hedge funds, where the goal is to beat markets, to go long or short, to bet on what companies are going to win versus what companies lose. I think the key thing is thinking about what's the source of edge, and is that a source of edge that's going to be maintained in a world where there's these kinds of technological developments. And that
Yeah.
source of edge can come from a lot of different places. That source of edge could come from having, being creative and thinking about how you craft the data sets that you're using, and how you actually think about how you're processing the world. Or it could come from because you're doing like deep on the ground research that no AI could ever, kind of replace. And so you have like that insight that's coming in that way, or about politics. Or it could come from, building up frameworks and understanding that are going to be at a level of complexity that are just difficult for AI in any world, because it takes the combination of both, things like the model data and that insight input and all of these different capacities. So I think the key thing is just identifying what's the source of edge first and foremost, which is you should always be able to articulate for a hedge fund that's going to be successful. And then breaking down, is that a source of edge that's something that is sustainable when you look ahead?
So do you think that folks who've operated in the hedge fund world or just investment world for longer, just because they've seen more data, they've seen more scenarios, and they know what really counts for alpha, are going to do better just because like they have more examples, just from that perspective?
Um, I think that that experience, experience counts for a lot. I think you need to combine, however, the experience with a constant obsessiveness with thinking about pushing the edge and
Yeah.
evolving. Because I think that exactly what was done yesterday is not going to be the thing that's done tomorrow. And in the hedge fund industry, it's a zero-sum game. Somebody winning is usually someone else is losing. And so it's the most competitive game that there is in town. And so if you're experienced, experience is good because it brings wisdom and thoughtfulness about how to think about these problems, but it's not sufficient.
Right.
because the edge of what's actually going to be alpha and what's just common knowledge is constantly getting pushed out.
I particularly derive a lot of energy from the hedge fund world. I don't know if there's something that particularly strikes you as a very private equity investor. I mean, it could be, maybe it strikes you, maybe it doesn't. But anything very, very specific to that world that you like.
And I think the private equity ecosystem, and in particular in the VC ecosystem, which is where a lot of my peers actually from college have
Yeah.
gone and worked. I think there is the ethos overall around building something amazing starts from imagining something that seems impossible.
Wow.
And that to me, it's, sometimes I could have conversations with my colleagues about, this is something where we could go, and everyone's like nitpicking. Our tendency is to be so logical because we're stress testing the ideas in the office. And an idea when you start, of course there's going to be 1,000 problems.
Yeah.
But when you want to climb an enormous mountain, when you want to do something that you've never done before, like starting an AI fund, it's about setting a goal that basically seems impossible and then fighting every single day to figure out how you're going to get there and making mistakes and looping and iterating and failing fast. And those have been lessons, that I think I've learned and had conversations about over the years with many of my peers and my contacts, in particular in the VC industry, and it's been super helpful.
Yeah, I love that. I think let's move to the research report that you talked about. Who will prove the most vulnerable to the pullback in equities? And you talked about how technology companies in the US have benefited from the low interest rates and the consequent capital infusion in the past. So, what do you think is happening now, and where do you think the long-term interest rates will be?
So I wrote that piece, and really I was highlighting like a piece of a dynamic that's a really important and big secular dynamic that's been going on for a long time. If you look at US companies, really, it's been a period of more than 35 years that have been enormously supportive for them.
Right.
One, you had the dynamic basically of globalization and the ability, which really benefited US companies. You saw the profit margins expand significantly as they were able to outsource all of their labor through that period. Then that was coupled with the fact that we were basically going through a monetary policy super cycle where you had
Right.
interest rates peak in the 70s and then go lower and lower each cycle as levels got higher. And then the GFC went to asset purchases. And all of that really fueled, there was the fundamentals from the first piece, and then that really fueled money continuing to flow into equities and pushing up multiples as well. And then in recent years, you've really had the dynamic as well of the tech companies and the moats around a small number of companies in particular. And that pricing gets stretched to levels which really suggests that US exceptionalism is going to be a dynamic that's here for the long run, that those companies are going to be the companies that reap basically all of the gains from a lot of the things like what's happening in AI, et cetera. So that's really been the lead up of where we are today. And looking ahead, I think it's really risky. There are a lot of things that are on the horizon that make that less likely. One of the big threads is, the shift from that world pro globalization, pro free trade to what
Yeah.
we call modern mercantilism, which is really, you've seen with the Trump election, obviously it's just the latest acceleration, but the move towards more nationalist, protectionist policies. And that both has creates risks in terms of those tit for tat conflicts between countries, but then also it's a move towards more expansionist fiscal nationalist policy at a time we've already really stretched fiscal spending deficits are at highs, debt levels are really high across a lot of the developed world. And that's a dynamic that if you look at that, that creates increased risks as well on the inflation outlook as you look ahead. And that has implications both for equity markets, but also for bond markets as well.
Mm.
So big picture, I think that we saw a secular bull market, and a lot of the drivers at this point have gotten stretched to their limits, like the pricing, or are actively in the works of reversing. Which, looking ahead, I think on a secular basis means we won't see some of the outcomes repeat that we've seen in the U.S. equity market backwards looking.
And when you look at some of these macro drivers, and by macro drivers, I particularly mean, say, you mentioned that the policies will now be more nationalist and stuff like that. We've obviously seen some of that even before Trump, but obviously not to such an extent. But as a manager, how do you decide that this something is enduring enough, right? Like this macro factor is enduring enough for it to actually have an impact on the kind of investing that you'd make versus not, versus it just being like a Fox News headline.
Yeah. So it comes from, I mean, I think it comes from, again, being students of history
Yeah,
and looking at through time there, dynamics that could be one off, and there are dynamics that are cyclical and have staying power at times because they're like more macro cyclical. And in particular, if you just look at what's happened in the global economy, I think we had those decades of globalization, which had lots of benefits for the companies. They didn't have lots of benefits for many people in the US as manufacturing was hollowed out.
yeah,
And so you had inequality really rising significantly, and that creating significant, more populist tendencies in the domestic economy. And that's something we've seen before. You
right.
look at earlier in the 1900s, that was a dynamic that happened too, and that generated the more nationalist policies. And so when you look at those underlying drivers, it's not like that problem's been fixed. So the trend towards more nationalism does really feel like it's likely a tendency because that's a good solution if for policymakers is point the finger at someone else and use that as a way to kind of try to turn the tide on some of those dynamics.
All right. So, Erin, I believe now everyone's been talking about China. China has been, a very important player for the world economy. And you at Bridgewater have been investing extensively in the Chinese markets. And China has historically been in the growth mode, but now it doesn't feel like that. What do you think, firstly? And if not China, then what are some other markets that you are interested in?
Great. So one, I think that both China's in a different position than it has been historically, and the world is in a different position than it's been historically. So let me
Mm,
start first with the world. So the conditions for China's really, big run and growth, there were domestic conditions that fueled that, but there are also global conditions that fueled that. We were in
right.
a world, the world of globalization and free trade was one where China, so much of labor was outsourced to China, and they got that huge boon in growth and productivity, in part because also there was a bunch of capital and investment from companies around the world, basically building out the usage of that labor. And then over time, obviously, they moved up the value chain and increasingly were running the production themselves versus others outsourcing the labor there. But that really fueled China's growth after basically the opening up in 2001, I think it was,
Yeah.
in a way that if you look today, I don't think that it's going to be the same conditions because you
Mm,
have this more nationalist, protectionist type of policy. I don't think anyone really wants to be outsourcing all their labor. If anything, places like the US are really pushing to reshore manufacturing back onto US shores. So I don't think that the drivers of growth are going to look the same as they did before. I think it's
yeah.
going to look a lot more like the countries where growth is stronger are countries that are set up well in that type of a dynamic and that type of a world. There's places like India that I do think
Yay.
are
I was
I
just waiting for that.
I do think have a lot of ingredients of a good setup because it's much more domestically oriented, not that exposed to some of those connections to places like the US that could really get hit in a world of more tariffs. And though obviously I think countries like India also need to do a lot to work on domestic governance and the kind of investment that it takes to get the productivity gains and the growth of the domestic economy to really realize some of the potential that I think is there.
What do you believe are the most important productivity drivers that the US could potentially focus on in the near term? And it may or may not be focused on as much.
I mean, if you look across the world, I think the US really has been a place that has been a winner from a productivity perspective. Just the comparison of the US versus Europe, I think, is
Yeah,
really instructive.
clearly. Yeah.
15 years ago, it felt like, oh, they're kind of on the same page and all
Yeah.
of this. And then just the way, both in terms of how European labor markets work and some of the rigidities around their labor markets, as well as what the ecosystem is like for starting new businesses, in terms of regulation and all of that. You just see the difference in how those types of setups in those two economies have led to huge differences in the outcomes, and just how much capital is attracted to the US, how much people want to start businesses are attracted to the US. And so I think in the case of the US, there's a lot which is, continuing down that path. I think there's, in the path of the way that it has been, I think the US stands to be a continued winner in a lot of ways. The ingredients are there. Now, at the same time, the pricing is also there. So I
Yeah.
would feel really great about US productivity on a going forward basis, as long as we don't screw something up. But I just don't think you're going to get the same returns that you did on a backwards looking basis because of where the pricing is today. Of
Mm.
course, there's always a potential of like an AI productivity miracle. So, never say never, but it's definitely a high hurdle to clear.
I think I'd love to touch upon your journey at Bridgewater. The last time we spoke, you mentioned that you had your own journey of confidence at Bridgewater, and it's been a beautiful one. Because I remember you told me that you started 15 years ago, so I'm sure there must have been a lot of learning. So why don't you tell us a bit about that? And I also would love to learn so much, because I feel like no matter how long you've worked for, there's always something to learn, something that you're always thinking about that you may not be confident about. So, would love to learn from you.
Yeah. So one, I'm not sure, it's never conquered, but
Yeah.
I can say, I came in, I started at Bridgewater, and I definitely struggled with confidence. I was someone who was afraid to speak up in a group conversation. And especially at Bridgewater, a lot of what we do is go back and forth on ideas to try to get to the right answer. And so if you're going to contribute, you have to be willing to say what you think and unafraid of being wrong, because you just don't, there's no time to get things perfect. It's a waste of
Yeah.
time. It's much better if we can go back and forth and get to the best answer together. So I recognized early that I was, I just wasn't where I wanted to be in that regard. And the main approach that I took is, at first I was like, I'm just not a confident person. I'm not someone who's confident, and I'm always going to be like a little bit, I'd be nervous about all these things, and it's just not who I am. And then I realized, why do I think that way? That doesn't make sense. I'm just going to think about this just like, I previously didn't know how to speak Japanese, and then I learned how to speak Japanese. I
Yeah.
previously didn't know how to code in this language. Now I'm going to learn how to code in this language. I'm going to treat this just like anything else, something that I can get better on, that it's not just who I am, it's something I can change. And then I went out and I went every single day. I did things that were like, honestly, some of the most painful things I could imagine. I
Mhm.
hated speaking in front of people. So I was like, I'm going to teach the whole class, and I'm going to stand up in front of
Wow.
everyone and do this. Or I'm going to be the leader in these meetings, because that's going to force me to be the one who's speaking. Or I'm going to go out and I'm going to get mocked to talk to our clients and do that. And honestly, I was just thinking about it every day, and I had a strategy, and I would go through the strategy and take those steps. And sometimes I'd feel like I was getting better, and then 2 steps forward, 3 steps back. But then over the arc of years, all of a sudden I barely recognized, the person who I'd been before. And I realized that doing that and working on that day in and day out, you really can create a huge change. And so that's one of the things I think I try, especially with folks who are coming up at Bridgewater, is to help them see that, like, this is not like a fixed characteristic trait. If you want to change, it is something you can change. It's not going to be easy. It's not going to be something you fix tomorrow. But if you work on it, it's something that can change, and then it can honestly have a huge difference in your impact,
Yeah.
and a huge difference in terms of your enjoyment of going through the day to day. So.
Has your relationship to perfection changed over the years?
Totally. I mean, I think perfection in a lot of ways is very related to confidence, because there's, a desire to try to get things perfect. So, because you are, afraid of, if they're not perfect, what does that say about you, and all of these things. And the thing I really learned as well, I remember I was working with Greg, who is our CIO, and I was working on some project, and maybe I'd do my first pass of it and I'd be done at Monday at 2 p.m. And normally what I would do is I'd say, oh, but I forgot this thing. Oh, but what about this thing? Oh, what if I rewrote that section? Oh, what if I added this chart? And then all of a sudden I'm not sending it to him until Wednesday at noon.
Ah,
And, and yes, it was better. It was better than
yeah.
it started, but it went from like a 90 to like a 91 or something like that in terms of the outcome. And really what I needed was for him to tell me, maybe I'd made a mistake on step one and like I should have restarted from there versus perfecting something, in a direction that was the wrong direction. I just realized how many cycles I was doing in my brain and in my work and how wasteful that was relative to getting to the best outcomes.
Yeah.
Of course, you have to get things to a good enough level that other people can productively engage. But I realized that I was way off in that balance over time, and it was having a huge negative impact on just how much I was actually able to get done.
And that's a very good point, because I used to do exactly the same thing with my bosses. And then I realized that the same thing that you realized, but I guess I was also very, like, I used to think that it would be a waste of time of my boss to, if they see something that's substandard. And therefore, like, I would just like work on things that, because these were new projects, so nobody really knew what was going on. So there was so many times that I had ended up wasting another day or wasting a few extra hours on something that didn't even matter eventually. So I always ask this very, very important question as to what would move the needle really, because I believe that there are literally maybe three factors that determine the success of any investment versus like the 10 different or 20 different factors that you may have put out and you're so proud of. Like those data tables, yes, I am very proud of them, but they may not move the needle.
Yeah, totally. And it's an art, it's not a science. I think
Yeah.
you have to build that judgment sense over time of where's the right level and of what's important and what's not important. But staring at that question and focusing on that question and getting that barometer better calibrated is super impactful.
What's the most undervalued asset today? Not stock or not a country, but anything else.
Yeah. So I think it is, I really think it's obsessiveness. It may not be undervalued, but but if you just look at the world, you have to be successful over time. I believe there's like a certain level of intelligence that you have to have, but above a certain level, it really doesn't matter how smart you are. And smarter people can actually get in their own way. And the thing that really matters above a certain level is whether you're obsessive, because people who are obsessive are people who are going to never give up. They're going to keep coming back at something. They may get it wrong. They're going to come back again. They're going to come back again. They're going to come back again. And they're going to come back again. And when you watch how that compounds over time, I've seen, I've been at the firm for 15 years and I've overseen many investors over time who've come up from junior levels. And some people who start in the middle or the back of the pack end up at the front of the pack because they're the one who was obsessive, who was thinking about things day and night. They're thinking about when they went home, thinking about on the weekend. They're developing their own strategies in their spare time. And that's the kind of attitude that you're like, you just can't keep up. You can be smarter, but someone else is just like running all the time, much faster than you.
Love that. Yeah.
So, especially investing, I think it super matters because that like depth of thinking and like constant honing of the edge is like the thing that ultimately I think makes someone an excellent investor.
Got it. Thank you so much, Erin. It was wonderful talking to you. And I'm sure there are so many people who will learn from you.
Thank you so much. This is great. I really appreciate it. Getting to come talk. I appreciate you reaching out. So
thank you.